All right, let's bring in now a couple of SpaceX investors. As we said at the top of the show, we got Jan Van Eck. We've got Joel Shulman. Gentlemen, welcome. Smile. You can smile. There's a lot of people. You should smile. You're early investors.
Yeah.
Is Joel SpaceX? I mean, we've always thought of it as a rocket company.
Right.
And it is because they have rockets. They do rockets really, really well.
Yeah.
But now we're learning there's a gigantic data center business.
Yeah.
There's a gigantic internet global connectivity business
Right.
through Starlink.
Right.
What is SpaceX?
So it's a three-engine empire, and each one actually has a moat. So three moats, I would argue. And the space component puts about 90% of mass in space at a fraction of the cost of government. So the government increased over 40 years or 30 years, 54,000 kilogram to 58,000. SpaceX has brought it down to 2,000, right? So they're doing a fraction of that. And now if you want a satellite up in space, you're probably doing SpaceX. So that's moat number one. Moat number two is Starlink, right? That's the cash cow. What a lot of people don't know is they have 5-tier pricing mechanisms. So when you think about Starlink, you've got the price for the consumer on the ground. You've got the price for defense. You've got the price for maritime. You've got the price business to business. And then you have the price for aviation. They're all using the same satellite. And the aviation charges 313 times more than the person on the ground. That's a moat not going away anytime soon. They leapfrog cellular. They are covering every part of the planet in this manner. Now, the third moat, which is potentially the biggest, and this is where the optionality comes in, is the XAI, or what they now refer to as SpaceX AI. And that one, if they're able to get data centers in the sky, right, if they're able to do that, the cooling costs go down, the energy costs go away if they're able to do this. And then now that's the real optionality, and I think that's why we have the premium price paid on this company. 3 engines, 3 moats.
To Kelly's point, you mentioned Amazon. There's a guy named Jeff Bezos. I think he was on our network yesterday. Blue Origin, his rocket company, is kind of the closest thing to this.
Right.
Are you an investor in Blue Origin, Joel?
No, so we were actually putting our money into SpaceX. That's where our money's going. And when you think about Blue Origin, I mean, they have to use the SpaceX rockets to get satellites in space. And when you mentioned Jeff Bezos, you've been talking about Elon Musk being the first trillionaire.
I think Bezos isn't going to be far behind him. That's my point. If Blue Origin can even do a little bit of this,
if they can, but right now Musk is worth more than Sergey Brin, Jeff Bezos, Mark Zuckerberg, Jensen Huang combined, right? Worth more than those 4. So we've never seen an entrepreneur quite like Elon Musk. So Bezos is a very strong, amazing entrepreneur, but Musk is, I believe, in a different category.
He's richer than Rockefeller, right?
Yeah, in fact, we go back, as you know, I'm an academic as well, at Babson College. When you think about the greatest entrepreneurs of all time, Rockefeller made 84% of his wealth, or more than 80% of his wealth, after this age, after age 54, 55.
Yeah.
So when you think about...
Also in a illegal monopoly.
Buffett was the same, though. I mean, totally different business, made most of his money after age 60.
Yeah, and then infrastructure. So when you think about that sort of parallel, and cutting costs, Rockefeller was very focused on cutting costs. There's nobody who's really focusing on cost cutting quite like Musk today.
And so we mentioned this, Dow's up 400 points. I mean, coming into the SpaceX IPO, Joel, give this to you first, there had been pressure on the markets. I mean, we started to see a bit of a pullback for the first time in some of the AI infrastructure areas. There was concern about capital being pulled from the mega caps into this. Have we now, between better Iran news and the way that this has gone today, have we cleared some of those worries?
Well, I think we have. I mean, to your point, the market got a little rich in some areas. We saw some companies that got a little ahead of themselves. We saw numerous companies trading multiples in the 100 to 120 to 150 market cap to revenue. Those were a little frothy. Unlike the SpaceX story, which we're talking about today, they did not have a moat. And so when you don't have a moat and you're trading that level, that's a problem. And of course, we saw the AI trade also, getting a little frothy, towards the fourth quarter, first quarter here. So if we have a peace situation, a peace deal finally, that would be encouraging. Some of the reallocation you talked about right now, some of the money, certainly as a portfolio manager, there's got to be a reallocation without new inflows coming in. If you have a $1.75 trillion, 1.7, now it's $2 trillion plus coming in, you've got to reallocate some of your portfolio. And we would normally expect some depression in the rest of the market. I think that's what we're seeing today. Okay, so to that point, I agree with NVIDIA. In fact, this is a company we bought 21 years ago, and we see SpaceX being the next long-term buy and hold. But when you think about the productivity that's going on right now, that we have revenue per employee at record levels. So when you think about just NVIDIA and what they've done, 3 years ago, it was $1 million revenue per employee. Now it's 6 times, $1 million per employee. So the productivity using AI models and other things, they're getting more revenue from fewer employees. And when you think about companies like AppLovin, it's $8 million per employee. These are extraordinary numbers.
Start a company? Am I missing? Should I start a company?
I think you should.
It can't be that hard, right?
I would cut Brian in as a junior partner.
Junior partner? Junior partner, Jan?
You said it.
You said before you should always get some upside, some share.
49.9% sounds good. That's a junior partner, technically, right? I'm not, mathing.
No.
Gentlemen, thanks.
Thanks.
I guess my quick final question, Joel, just to put an exclamation point on it then, does this change the outlook for what the S&P can do for the rest of the year?
I think it does. I mean, in fact, we were talking about the S&P 500. We know that the S&P did not allow fast tracking technically, but there's $7 to $10 trillion that's tracking in the passive indices. There's probably another $7 to $10 trillion that's active managers or managers who use the S&P as a benchmark. Those guys are coming in. And when we see the indices start to come in 1 to 2 weeks, and we've already seen people probably slowly drip in, that's going to be a big push. I think this is going to be a stock that's going much higher at the end of the year.
It's the mechanical stuff you're talking about, the reallocation.
Yes.
They got to buy it. They got to balance it out. It's amazing. You guys are amazing. Everything was amazing except for the junior partner thing. Everything else was great. Guys, thank you very much.
Thank you.